Good morning, everybody. Welcome to the Locking Your Success Options Trading for Income Weekly Update for February 9th, 2015. Before we get going, we'd like to remind you that the presentation is for educational purposes only. We're not broker-dealers or financial advisors, and we're not making any specific trade recommendations. Also, please note that the risk of loss in trading options can be substantial, so please be aware of all your risks prior to placing any trades, and that we will be using computer-simulated hypothetical trades in the presentation. And although the trades are believed to be as accurately represented as possible, live results may vary. Come on over to our website, check out our programs, the M3, the Bearish Butterfly, the Rock M21, and our one-on-one and trading triangle coaching programs. You can become part of our inner circle by joining our mailing list and get your free report, 7 Secrets to Becoming a Successful Trader. And also, if you're there, remember to sign up for this free weekly webinar so that you can get all the updates regarding to that. Some exciting things, developments in our programs. The dates for the super simple spread trades. The release of that new program is going to be April 20th, 2015. For those of you who aren't aware of what the super simple spread trades are, they are a set of simple spread trades that are geared more towards a beginner's market who aren't really ready to get up into the M3 type of a trading system yet. And we also have the Advanced Position Management live event that we're going to be having, where we're going to be doing a presentation for 2 days in front of a live audience, probably going to be around 16 hours of great education there. It's designed for more advanced traders, so people who've been trading the M3 for a significant amount of time. They've been through the M3 course, and it's designed to take them to the next level. So what we want is 2 things. If you come to the event, we want to make sure that you're going to get the absolute most out of it, and if you don't have a very thorough understanding of the M3, then you're just going to get lost, so there's no point in doing so. And again, having advanced people there, we're going to be able to get to some very advanced topics, have some really great questions, and really propel your trading forward. So if you've traded the M3 for a while, you know that there's just so much more than what appears to be on the surface, and things go really, really deep. And we're going to get into that here. So it'll be a great, great session. If you're interested, please email me. 2 things. I want to make sure that you actually qualify to come. In other words, you have the background in order to get the most out of the program, and I want to make sure that you know what's going on with that. So if you're at the right skill level, this is a must-attend event. Also coming up forward is a trading triangle book, which I'm working on. I don't know if I'm going to get it done by the summer, but I'm going to do my best to do that. We're also going to be doing a online trading triangle course. We're going to kind of convert some of that online to help so I can actually bring in more people. Right now I can't take another trading triangle person for, I don't know, 6 months probably. So doing this, we can accept more people and get a lot done. Also, we have the DST, directional spread trades, coming out late 2015 for those of you who would like to do some directional trading with income trades. And of course, we're going to be gearing back down at some point, probably in 2016, and start putting out some real beginners courses so that we can get people up to this level so they can trade and do well in the markets. Speaking of the markets, let's take a look at what's going on. Last week, we saw this really bullish day on Monday. Once we saw that, it was probably pretty much a no-brainer. We're going at least to the top of this range here at around 1205. We actually broke that range, went a little bit higher, tested our at least the bottom side of our more primary resistance level here. They wouldn't be surprised at this point if we push back up and hit our all-time highs, nor would I be surprised if we come back down here. I do think whichever direction we go, I think the market's going to be start to slow down a little bit. In other words, it's going to be limited. If we break to the upside, I would expect this area up here around 1220, 1225 to hold. If we come down, I would also expect the 1190 area probably to be a significant point here. And like I said, I would think we're going to finally, for a change, maybe run a little bit sideways. I could be wrong. And you know what we're going to have to watch. You'll have to watch the other indices to see what they're doing. You know, as of right now, the Russell from last week was the weakest index, if you compare our mirror support and resistance levels, the Russell broke over this area here, where the NDX, the Dow, and the SPX did not break those levels. So that brings the Russell from previously being on the weaker side of the indices to being on the strongest side of the indices, which is interesting, and just kind of gets into the more confusion in the market type of theme here, which tends to lead us a little bit more sideways. If we look at the SPX, you can see what I mean. This level here, which did get broken intraday, failed, and we closed back down below that resistance level, which would indicate that we're likely to come down further. We have the Dow, which essentially did the same thing, right? We came up into this 17.9 area, we backed off of that, and the NASDAQ didn't even make it that high, so it didn't even complete the U here, which is saying this is a little bit weaker than some of the other indices at this point. So what's going to break down first? Well, if we get a serious breakdown, we'll probably start in the NASDAQ at this point, unless again the order of strength changes. And these are some levels I'm watching in the Dow right here. This diagonal trend line, a breakdown of that would be interesting to the downside, indicating we might go lower than what I thought. And if we shoot over to the SPX, realistically that should hold the low of this day here, which is like the 2020 level. A breakdown of there would again be an indication that maybe we're going a little bit lower than I thought. But I do believe that we're more likely to stay in this range here for at least for the week. All right, let's take a look at what our positions look like. Oh, but before we do, one thing I forgot to mention. This is actually not the live webinar we did at 9 o'clock. This is a little bit later, and the reason that we're running this now a little bit later is because that webinar had some technical difficulties, and not only did I lose sound during the webinar, I also lost the recording. So those of you who attended that webinar, you did get the full webinar, you got all the results, and we had a lot of great questions that were answered. Unfortunately, I don't have those questions. They got deleted with the recording of the webinar. So I'm just kind of redoing this for you guys, and we're just going to quickly run through the positions here, and we'll go from there. So let's go to our February V Condor. On this trade here, on Monday, let me just go into Back Trader. As of last Monday, we had 15 shorts here at 1080. We had 15 longs at 1050, and we also had on the upside 15 shorts at 1280 and 15 longs at 1310. By the end of the day here, I was running too high of a positive delta. We only allow 50 positive delta in this position. So what I ended up doing is buying back 3 of these 1080s to bring us into range. So this is what the position looked like before we did that. Again, we're plenty far enough from our short strikes, but we are touching on delta limits, and we went ahead and dealt with that. So looking here, you can see I bought back 3 of these, put us into this position here. Of course, that ended up not being the right thing it was the right thing to do, but it ended up not being too beneficial for us because we had the market move to the upside. And at the end of the week, here was our position right here. Essentially, what else we're doing is we're waiting for this position to expire, and we should be getting around $4,600 for that. Next trade is, let's see, a Bearish Butterfly. No, the February Bearish Butterfly has already been closed at our higher than our reduced profit target, so that was a decent month for that. We have our February M3. Let's go back to Monday. We'll take a look at that. As of we closed last Monday, end of the last update, we had 1140 butterflies. We had 10, 1140, 1150 verticals. We also had that call on at 1100. On Tuesday, the market shot up a little bit, creating a delta issue outside the tent. So what we had to do is sell 5 of these 1150, 1160 verticals. That brought us down under minus 50 delta. That put us in a position that looked like this. So nice looking M3 position there. And then everything was fine until Friday, where we were up here and we started having Vega issues with the trade. So what we ended up doing is we ended up rolling our 1140 butterflies up to 1160 and adding 1160, 1180 10-point verticals. Gave us a position that looks just like this. So as of right now, the way we're sitting here is we have 14 days to expiration, and as of today, Monday, it's going to be 11 days to expiration. We're minus 55 delta, up slightly, but pretty flat for the month at this point. So with the market moving around like that, hasn't allowed us to gain a whole lot of value. The market does what we think it's going to do. This will actually be a pretty good trade this month. That's where we sit with the February M3. If we take a look at the February rock trade, this was an M3. If we come back to Monday, because of the high volatility, it was entered as an M3, and we were in a slightly different position. We only had 5 shorts here at the 1150. We're actually up a little bit of money, more money, mainly because of the timing of entry was 30 days to expiration instead of 56, and 56-day expiration entry happened to be kind of a poor entry this month. So here is what this position looks like here. On Tuesday, we did a similar thing. We sold some verticals, but we sold 5 1140, 1160s, again to correct our delta outside the tent. Here is the position as of Tuesday. And then on Thursday, we had we outran our M3 position. So in a rock trade that's entered in an M3, if we outrun our M3 position, in other words, we have to roll up the M3. What we're going to do is we're going to check to see if we can go into a rock trade position, which it actually we were able to do that. And if we take a look, what we did is we closed the M3 position. We opened 10 1180 butterflies. We opened 10 1220 butterflies. And we opened 2 1240 butterflies to bring us to about minus 186 delta. And this is what our position looked like as of Friday. So from here, if the market kind of chills out, which we're thinking it is, again, this will be a very nice position. If what happened last month happens this month, then we're going to end up pushing this back and going back into an M3 again eventually if the market comes down hard. And of course, if the market grinds up, we'll get fully scaled into our rock position. So we have a lot of options here. The trade looks good. With the range the market's been holding, I'm not particularly sure I wanted to come into this position, but those are the guidelines, so we went ahead and did that. I think it'll work out anyway, but it'll just going to be a lot of extra work for nothing if the market comes down hard. So here's that, and then as of Friday, we'll just show you what this position looked like. And voila, that's what we have. So looking good. We'll see how far the pullback is today. That's going to kick us into doing some other things. As of right now, though, it's looking pretty nice. Let's see. We have our March positions. We have our March Bearish Butterfly. And on Thursday is the day we had the adjustment. We hit our add point. We did not have a delta theta ratio problem, so we just went ahead and added our 1180 butterflies here. So now we're 2/3 scaled in, 1160, 1180s. Again, this trade looks really nice if we back all the way down to 1150, and that would work out really well. I don't think I'm really expecting that, so we're just going to have to watch our maximum delta and delta theta ratios to see if we have to do anything here. But as of right now, so far so good. And then we have our March M3, which I'm just going to show you where we stand today, where we sit as of Friday, because there were no adjustments here. We started with 13 1160 butterflies. We had, let's say, a 1020 call. This is what our analyzed graph looks like. Realistically, this trade is probably not going to need any sort of an adjustment to the upside, at least not for the next week or two, until we exceed at least 1220, and we really probably aren't going to see an adjustment to the downside either unless we get under 1160. So this is what we're looking like, and that's a beautiful looking position. And the last position we actually have on is a March V Condor. This trade also did not get any adjustments. And this is what we look like here. So let me show you the picture. All is good. Of course, if we get back into here, we may end up having to deal with this V later on in the trade. If the market continues to grind, as long as it's not too fast, then we may not need to do anything with this either. So looking good. That's what we have for the positions. Again, I apologize for not having the actual webinar up. We just had, like I said, some technical challenges which happen from time to time, and there's not a lot we can do about it. Also, if you're interested in advanced position management, if you're an M3 trader and you've traded for a while, I want to meet with some of the top traders in the world that are going to be at that event. As far as market neutral traders, these guys they're going to attend the event as well, and because they want to get as much as they can out of their trading. This is going to be a fantastic time there. So make sure you let me know if you're interested in coming. All right, thank you everybody, and we'll talk next week.